Most people holding Bitcoin think they have to sell it to buy a property. As of this year, that's wrong. Selling might be the single most expensive way to fund your new property by covering your down payment and closing costs by selling your crypto. I'm a licensed mortgage advisor in New Jersey and Pennsylvania, and 65 to 70% of my clients are investors. So I've been watching this cycle shift file by file, not by headlines and headlines. And no, you don't need to be a whale. You don't need to have some sketchy offshore crypto bank to make this work. This is actually moving through regular US lenders right now. The federal government ordered Fannie Mae and Freddie Mac to start treating crypto like a real asset. One of the top 25 biggest lenders in the country already accepts it, but the rules are very picky, and the people who set their accounts up the right way will qualify, while everyone else is still searching for more information. So here's the plan. We're gonna go over what's actually live today, what's still coming, and the 6% math nobody runs before they go ahead and sell their crypto. And we'll go over the exact way to make your crypto mortgage file ready. I call this the crypto ready file. So let's get started. Let's start with what changed in Washington, because it's bigger than a lot of people realize. In June 2025, the government flipped. The default on crypto before that was crypto doesn't exist. We don't care that you have crypto and we're not gonna count it. It went from that to it's an asset, but it's still in progress. For years, underwriting treated your Bitcoin like a casino chip. If you had crypto, you had to go ahead and sell it or convert it into dollars, park it in an account, and let it sit there for a while for it to even be counted. And the worst part is, when you did all that, you ended up paying taxes for that privilege of just going to go ahead and qualifying for a mortgage. Then on June 25 of 2025, the director of the Federal Housing Finance Agency ordered Fannie Mae and Freddie Mac to prepare proposals to count cryptocurrency as an asset in mortgage risk assessments without converting it into dollars first. Now that's the most important part, allowing you to use your crypto assets as an actual asset when you go ahead and apply for a mortgage and not forcing you to sell it and converting it into a USD. And this is the part that really matters. The directive that's happening right now only covers crypto that's held in US regulated centralized exchanges, and it requires a risk adjustments for volatility. And it sits inside of a bigger federal push, the Strategic Bitcoin Reserve. And the goal for USA is to become the crypto capital of the world. Now, here's the honest caveat. I'd rather you hear it from me first than you hear it from somebody else. This idea that we just went over of allowing you to use your crypto as an asset, it's not completely live for conventional loans just yet. Fannie and Freddie still have to submit those proposals to the government and get them approved. If someone out there is telling you that you can go ahead and use your Bitcoin on a regular conforming mortgage as of today, they're still way too early. Don't go ahead and build your purchase timelines just on a press release. While Washington is still drafting the paperwork, one of the top mortgage lenders in the country decided not to wait. And what they launched in February of this year is the part that you can actually go ahead and use as of today, or when you're watching this video. You can, as of now, qualify for a mortgage using your crypto, just not through the front door. In February 2026 of this year, NewRez, one of the biggest lenders in the country, started recognizing crypto for mortgage qualifications through their non-qualified mortgage products. What is a non-QM mortgage? Non-QM just means mortgages that are built for people outside of the standard government-backed boxes and getting paid with W-2s. For example, if you're self-employed, if you're asset-heavy but income-light, or you're an investor, you might want to take a look into this. Let's go over what actually counts. Here's what counts. Bitcoin, Ethereum, SEC-approved spot crypto ETFs, and US dollar stablecoins are allowed for purchases and refinances for primary homes and investment properties. Now, let's go over the restrictions. This is where most people get disqualified. Number one, your crypto gets a pretty big haircut. Lenders apply mortgage adjustment value to account for the volatility of crypto. So let's say you have $200,000 in crypto, the lenders are not gonna count it as $200,000. Two, it has to go ahead and sit in a US regulated exchange, brokerage, or a chartered bank for it to qualify. Your cold wallets or your hardware wallets or the keys in a safe setup, that's not gonna work. Self-custody, it's not gonna count because of the fact that self-custody is invisible. So the underwriters are not gonna see it and they're not gonna count it. And number three, your down payment and closing costs still have to be paid in dollars. You cannot use your crypto at closing. So what does all that mean? It means that your crypto can help you qualify, but for closing costs and for your down payments, that still has to be done in actual dollars. And one more trade-off is non-QM products, they run on a little bit higher mortgage rates than your conventional 30-year mortgages, and they have more stricter guidelines. But that is the price you pay for the flexibility of owning crypto. So the move is not to go ahead and rush into a non-QM loan because it accepts your Bitcoin. The move is, if you're self-employed or you're just sitting on some serious crypto and you can't show your W-2 income, have someone go ahead and price out a non-QM option against the alternatives that are available. It wins for some files. It also loses for others. The math is what decides, not all the hype that you're hearing right now. Quick pause. If you're holding crypto and even thinking about a property in the next year or so, the worst plan is guessing whether your crypto counts or doesn't. I'll do the mapping for you. We'll sit down in a proper consultation at zero cost and we'll figure out a proper game plan where we'll go over what the actual costs are, which crypto actually counts, what kind of a haircut are you gonna get in the value of your crypto, and what the taxes are gonna look like, and if the loan actually fits your game plan. It's a free strategy call. There's no pitch. The link will be in the description where you take a look at it and reach out. Let's go over the 6% math that you should be doing before even thinking about trying to get a non-QM mortgage. Selling your crypto to cover the down payment and the closing costs might be actually more expensive for you than to go ahead and just borrow against your crypto. Because when you go ahead and you sell your crypto to cover your closing costs and your down payments, you end up triggering a capital gains tax and you give up every single dollar of the future upside of that crypto that you've spent years and years building up. When you go ahead and you borrow against it instead, you keep your position on the crypto. Also, there's no sales report, meaning there's no taxes that you have to pay on your profits when you borrow against your crypto and not sell it. What happens is the benefits of it is you keep your current position, you keep your profits. There's no sales report because you never had to sell your crypto. And when you borrow against your crypto, you keep the position. There's no sales report and you pay interest instead. And before anyone yells at me, whatever we're going over right now, talk to your CPA. As I do mortgages, I don't do your tax returns. So you always want to run by everything that we're kind of going over with your CPA. Here's a comparison that everyone is talking about. Coinbase lets you borrow cash against your crypto. And those rates with Coinbase as of today are sitting right around 6%. Sometimes it's even lower. Meanwhile, a 30-year conventional mortgage as of today is sitting right around 6.5%, depending on the credit scores of the clients. So borrowing against your crypto and not selling it might actually make more sense and cheaper than using it to borrow to get a mortgage. So let's kind of put everything into an easier way to kind of understand it. So let's say you're holding about $100,000 in Bitcoin that you had bought last year for around $30,000. That kind of means that you've made a profit of roughly $70,000. Now that's your profit. That means you have to go ahead and pay taxes on $70,000 of profit. For long-term capital gains, it usually sits around 15 to 20% of the profit. And for some states like New Jersey, they also charge you state taxes like regular income. So that could also mean that you would end up paying roughly about $15,000 in just taxes for you to go ahead and access your $100,000 of crypto because you decided you would go ahead and sell it. So there's an option that's now available with Coinbase. You could go ahead and borrow against your crypto. Let's say with your $100,000 in Coinbase, your $100,000 in Bitcoin, you could borrow $50,000 against it at a rate of around 6% and use that money for your down payment and closing costs instead of ever having to sell your crypto. Meaning you're probably gonna pay around $3,000 to $4,000 a year in interest, but now you're still holding on to your actual Bitcoin. As the profits on that increases yearly, you benefit on that side as well, and now you're also owning a property. There is a trap. There's always traps, and this is the part that blows up loan files. Mortgage underwriting cares where your down payment came from. Borrowed funds have rules. They have to be disclosed and sourced, and plenty of programs restrict them. So if you quietly just go ahead and sell some of your crypto and transfer it into your savings account or checkings account about 2 weeks before your closing, and you thought you were super smart and clever, it's not gonna work. The underwriters are gonna catch it and they are gonna question it. Remember, the risk on the other side, if Bitcoin's price does drop hard, a crypto-backed loan can be called and liquidated. So you have to plan things out. This is why you need to sit down and map everything out with your loan officer, your mortgage advisor, before you make any of these plans. Which brings us to the last piece, the boring 60-day move that decides whether your crypto will count or not. This is the part almost nobody does. It's the whole game. So how we just went over where you went through your Coinbase account and you just transferred the loan that you had taken out against your Bitcoin, and then you just transfer that money to your bank account 2 weeks before your closing. That is not gonna work. You have to make sure your crypto has to be verifiable before you ever need it. Here's the idea that should change how you look at your portfolio. An asset is not what you own. An asset, it's what the underwriters can actually verify. $1 million on a hardware wallet in your safe to a lender, to an underwriter, equals zero. 100 grand sitting on a regulated exchange with clear statements and track, that's considered an asset to underwriters. The crypto world spent more than a decade saying not your keys, not your coins. Mortgage lenders say the opposite. You can hate it that they look at it that way, or you can use it as a benefit for yourself. So here is the crypto ready file. 4 steps. Step 1, relocate. Relocate meaning move your crypto that you are actually going to be using for your down payment and your closing costs and transfer it into a US regulated exchange or a brokerage. Leave your long-term cold storage alone. Just transfer exactly what you need for your closing costs and your down payment. Step 2, you need to season it, meaning let that crypto sit and generate your monthly statements from your brokerage or your cryptocurrency exchanges. Let it sit and generate monthly statements. 60 days is the minimum because underwriters want to see a history. So if you're able to show them 2-3 months of bank statements stating that this is your crypto, this is the value, and no, you didn't just go ahead and transfer it recently because your closing is next week, the underwriters will approve it. Step 3, document the tax picture now. Know your cost basis. Sit with a CPA before you sell or borrow against your crypto, so the tax bill is a number you plan for and not a surprise in April. And step 4, pick your lane. Either a non-QM program today makes sense, or you're gonna sit down and position your file and have it ready for when conventional mortgages catch up to the non-QM mortgages. And all this is going to depend on your income, your timeline, and the property that you want. There is no universal answer for every single person. It's going to be very dependent on each person and their personal situations. But you need to sit down and plan everything out before you go ahead and even start shopping for a property. Not when you find a property, you make an offer, and it goes into underwriting. You're way behind. And most likely, your file is going to get rejected. The buyers who who get hurt by the new programs that are coming out are always the ones who showed up mid-transaction, have nothing ready, have no game plans, and have assets that nobody could actually document. So everything that we just went over, that's what I like to call the crypto ready file, and how to structure it and how to get it ready to buy a property with your crypto. I'm gonna be very straight up with you. This program is not for everyone. If your plan is to YOLO a cold wallet into a closing in about 2 weeks, I can't help you. But if you're holding real crypto and you're thinking about buying a property, whether it's a single family or a 2 to 4 unit investment property in New Jersey, Pennsylvania, or anywhere in the country, you want to have the numbers mapped out before you move anything around. You need to sit down with a mortgage advisor to help you plan everything out. If you want, we'll figure out a proper game plan in a 20-minute consultation where we'll sit down. We could figure out the proper game plan for you with the link in the description. Drop me a comment. Would you ever sell your Bitcoin to buy a property? Or would you never ever sell your crypto now that you know what's about to happen in the real estate industry?